My plan is always in operation, which is to take money to cash consistently. So I have because I don't believe in bull bear 4-year cycles and nuclear winters. I think we're just doing more of the same. This is the second time we've gone up and we've retraced more than 50%, and then we're going up, and they're just choppy. It's just choppy times. You don't want to be overexposed. You don't want to be all in. You don't want to be all in and then on leverage, because when it pulls back 50%, you're going to be freaking out. There's a thing about freaking out is the most tragic thing about freaking out is not the pain of freaking out, but the loss of your IQ. When you're freaking out, you don't think straight, and you do the stupidest things like sell the absolute bottom, because now you've got to cover the pain you're under and the sleepless nights because you were overexposed. So I've always got a chunk in cash, even though maxis, like us, I'm also could consider myself a maxi when I talk about Bitcoin as a monetary standard, but us maxis like to think all in and never hold that dirty sinking fiat. But I'm just practical. It's like I'm going to have this percent. I think it's like, well, my minimum is always have 10% in cash, and that 10% in cash, I know that that's self-preservation of my ability to think. That's my strategy is to have between 10 to 20. I probably want to ramp it even 20 to 30%, maybe even 40% in cash as we go into this year. But I would say that because cash, we can currently yield on cash, and we can beat the monetary dilution that the Fed's printing. Like, I'm looking for high yield on USD. Honestly, that's better than real estate. Real estate growth. My thing is now to go like 2 liquid buckets. One is crypto, Bitcoin, predominantly. The only thing I HODL is Bitcoin, and then I have stable coins that are yielding, and then I have the speculative thing called a exchange account, which holds any number of shit coins and trades or leverage instruments, and that's my exposure to the exotic stuff, including altcoins. If I ever buy Ethereum, I'm only buying it on the exchange. Maybe that's wrong.
You don't cold storage it up.
I never cold storage, unless it's like I'm playing DeFi. Then you have to use that Ethereum network's going to take me to the cleaners every time I click some MetaMask wallet. It's like $200 per transaction, doing some weird thing, some very interesting, innovative smart contract. No, I mean it too. It's like, it's cool experiments, but gosh, it's you got to be trading like a lot of money before that gas fee's worth it compared to like doing something on the exchanges. I think it even surprised institutions who were responsible for the initial sell-off, but then the whole thing went risk off even more, and then the people that were ready to step back and waited and like, whoa, I'm not timing it as much, even though I time it in that exotic exchange basket. I'm just like, the cash, sit on yield. And let's be honest, like, Bitcoin's not like doing a 2015 to 2017 ever again. That was 133x. The only way it's going to do that is the financial Armageddon, where you don't even care what the US dollar is worth because it's hyperinflated away. And I don't think that's going to happen. So I'm thinking longer term, like, here's my cash exposure, here's my investments in companies, here's my house, here's Bitcoin, here's cash yield, and it's just sensible allocations. Sensible for me, it's probably a bit risk on for most people. I'm well overexposed to tech and Bitcoin. It's at least it's not 100% Bitcoin, and I do want to go more.